Okay, so have you ever thought about like turning nothing into 100 grand in just 1 year,
Oh, yeah, definitely.
like through investing?
Ugh.
It sounds crazy,
It
right?
does sound like one of those too good to be true things, doesn't it?
Totally, like one of those flashy internet ads that promises you'll get rich quick.
Right, exactly.
But what if it's actually possible?
Yeah.
Like, what if there are real strategies and real people who've actually done this?
Mm-hmm.
Like real documented cases of this rapid growth.
Yeah.
That's what we're looking at today.
Yeah, for sure.
So like separating the hype from the reality,
Yes.
exploring some actual examples,
Yeah.
and figuring out what it really takes to build wealth quickly.
Exactly.
So like, it is possible to see big returns in your first year,
Yeah, that's right.
but it's not about like magic formulas or anything. You
Right.
know what I mean?
Yeah.
It's not overnight success.
For sure.
We really need to like understand what actually makes it happen,
Yeah.
the strategies that work,
Right.
and also the risks.
Mm-hmm.
So let's start by looking at some real-world examples.
Okay, sounds good.
Are there actual cases of people having huge success in that very first year?
Yeah, absolutely.
Like,
There are documented cases
okay.
that show how being strategic and, recognizing potential early on can lead to some pretty impressive gains.
Oh, like, give me an example.
Okay, well, there's the select growth investment strategy
Okay.
since 1992.
Yeah.
This approach has had a cumulative return of 3,787%.
Whoa.
Yeah, which is way better
Okay.
than the Wessel 1000 growth index for the same period.
Okay.
So yeah, you can imagine the gains for those people that got in early.
Yeah, okay. So, like,
Thanks,
you know what I mean? Yeah. So that's impressive. But those big index funds
Yeah.
can seem kind of like abstract, you know?
Yeah, sure.
Do you have any examples of like a single person having this kind of rapid success?
Yeah, of course.
Someone that like, people listening can relate to.
Yeah, so
Like,
let's look at someone named Joe, who bought stock in Slice Pizza Corp.
okay, wait, Slice Pizza Corp.
Yeah,
Oh.
back in 2017.
Okay.
And just a year later, she sold her shares for a 20% profit.
Whoa. Okay.
So she turned $1,000 into $1,200.
Wow. So even with just a small amount,
Right, exactly.
you can see huge returns really quickly.
Yeah, absolutely. And it shows that
Yeah.
even if you don't start with a ton of money,
Right.
if you choose the right stock,
Yeah.
you can get substantial returns in a pretty short time.
So a 20% return in just 1 year.
Yeah.
That's amazing.
Yeah.
Like, was she just lucky or is there something else going on?
Well, there's always going to be some luck involved
Yeah.
with investing, but I think Joe's success probably came from a few different things.
Okay.
We're going to explore different investment approaches
Yeah.
that are known for having the potential to make high first-year returns.
Okay, let's get into that.
Sounds good.
I'm all ears.
Yeah.
So what are some of the ways people get these amazing results?
Yeah.
Especially in that first year.
Well, one common approach is growth investing.
Okay.
This strategy focuses on finding companies that are expected to grow
Mm-hmm.
at a rate faster than average.
Faster than average. Okay.
Like way faster than the market average.
Okay.
Think of companies like Tesla or Amazon back when they were just starting out.
Okay.
Early investors who recognized their potential saw huge returns
Yeah.
as those companies expanded.
So it's all about like finding the next big thing before it like blows up, right?
Yeah, I mean,
Sign me up.
yeah,
But seriously, how do you even like
right.
spot those companies?
So it's not really as easy as just like
Yeah.
picking a company with a cool product or a catchy name or something.
Yeah.
Growth investing means really understanding
Yeah.
a company's financials,
Right.
their position in the market they're competing with,
Yeah.
and their long-term growth potential.
Okay.
It requires research and analysis.
Got it. So it's not just about like
Yeah, and taking a risk.
following the hype.
Right, exactly. You need to do your research.
You do your homework.
Yeah.
But growth investing sounds kind of risky to me.
Yeah, it can be.
Are there other approaches that are a little less,
Oh, for sure. Yeah.
nail biting?
Yeah, there are. And they all come with
Yeah.
their own little quirks. So
Okay.
another approach is active trading.
Okay. Active trading.
Yeah, think of it like surfing.
Okay.
You're riding the waves of the market,
Yeah. Okay.
but in the short term,
short term. Okay.
you're constantly buying and selling stocks
Yeah.
based on how you see the trends going
Okay.
and other market signals.
Got it.
Remember that whole GameStop thing?
Oh yeah, GameStop.
Back in 2021.
Yeah.
That was like the perfect example of active trading,
Okay.
although a very extreme one.
Right.
But people saw huge gains in a short amount of time.
Yeah, for sure. But
But it required a lot of expertise.
yeah.
You had to be paying attention all the time.
Right.
And Yeah, you had to have a strong stomach,
Yeah.
to deal with all the ups and downs.
So, okay, I remember that GameStop thing.
Yeah,
It was like all of a sudden everyone was like a stock market expert,
exactly.
but then it all like crashed down
Yeah, and that's the thing.
just as fast.
It can happen really fast.
Okay, so is there something that's like a little less intense,
Oh,
a
yeah,
little more
of course.
predictable?
Yeah. So, let's look at sector rotation.
Okay, sector rotation.
Yeah, this involves moving your investments around
Okay.
to different sectors of the economy
Okay.
based on like which ones are expected to do better.
Yeah.
At different points in the economic cycle.
So like for instance.
So, for example,
Okay.
after COVID,
Yeah.
the technology and consumer sectors,
Hmm.
like discretionary sectors,
Yeah.
they saw huge gains
Yeah, that makes sense.
as things started recovering.
People needed computers and stuff.
Exactly.
Right
So
now.
the investors who saw this coming
Yeah.
and moved their money around accordingly.
They were in a great position to make some money.
That's interesting. So it's like being ahead of the curve,
Yeah.
like predicting which industries are going to boom.
Exactly.
But that seems like you need to have a lot of knowledge
Yeah. You need a good understanding
about the market.
of economic cycles,
Yeah.
market trends, and yeah, an eye for new opportunities.
But even then, I guess there are no guarantees.
No, not at all. Even with like the best analysis,
Yeah.
there's no sure thing in the stock market.
Okay, good point. It's definitely more complicated than I thought.
Yeah.
Are there any strategies that feel a little less risky?
Hmm.
Especially for like someone just starting out.
Oh, yeah, for
Not
sure.
something that feels a little more,
Yeah.
hands off.
Yeah. So one option is leveraged ETFs.
Leveraged ETFs. Okay, what's that?
Yeah. Or exchange traded funds.
Okay.
They use leverage, which is like borrowing money
Okay.
to potentially increase your returns.
From a specific index.
Yes, exactly.
So like, give me an example. Think of it like you're adding a multiplier
A multiplier. Okay.
to your potential gains.
So like I could double or even triple my returns.
Yeah, potentially, but
That sounds good.
there's a catch.
Okay, there's always a catch.
Yeah. So leverage makes both gains and losses bigger.
Oh, so if the market goes down,
Yeah,
I could lose a lot more too.
exactly. If it goes against you,
Yeah.
you could lose a lot.
So high risk, high reward.
It is definitely high risk, high reward.
Okay. Duly noted, that's not really my style.
Okay.
What about all those stories you hear about people like
Yeah.
making tons of money with IPOs?
Yeah. IPOs or initial public offerings,
Yeah.
that can be exciting.
Yeah.
Imagine getting in on the ground floor of the next big tech company.
Like the next Google or Amazon?
Yeah, exactly. Before anyone's heard of them.
Yeah, that's the dream.
Right.
But how do you even know which companies are going to be successful?
It takes a good...
Okay, so you're evaluating more than just a product, right?
Yeah, for sure.
Like, what are you looking at?
You're looking at their management team,
Oh.
who they're up against,
Hmm.
and whether they can, shake things up in their industry.
Shake things up or create a whole new industry.
Exactly.
All right, so it's not just about putting money into whatever's trending.
No.
You got to be smart about it.
Yeah.
But, okay, let's be honest.
Okay.
When we hear about those people that get rich quick,
Yeah.
we can't help but wonder,
I know.
like, what's the average return for someone in their first year?
Right.
Is 100% actually realistic?
Yeah, that's a great question.
Yeah.
And we are going to explore that more.
Okay, good.
But before we do, let's take a closer look at setting goals.
Okay.
Clear investment goals.
Goals. I thought it was all about picking the right stocks.
It's definitely part of it,
Okay.
but it's not the whole story.
Right.
If you don't have goals, you're basically just sailing around without knowing where you're going.
Okay.
You need to know what you're aiming for.
Like, what do you mean?
Are you saving for retirement or maybe a down payment on a house?
Yeah.
Or are you just trying to build a good financial foundation?
Yeah. Okay. You're right. I need to visualize what I'm trying to achieve.
Exactly.
But how specific do these goals need to be?
Mm-hmm.
And how do I know if what I want is even realistic?
Right.
Especially in that first year.
That's where the idea of SMART goals comes in.
SMART goals.
Okay, so we're talking about goals that are specific,
Okay.
measurable,
Okay.
achievable, relevant,
Got it.
and time-bound.
SMART goals. I like it.
Yeah,
But how do I actually set these goals?
right.
And what about all those scary investment mistakes people make?
Yeah.
How do I avoid messing up as a beginner?
Those are great questions.
Yeah.
And we'll definitely dive into those in a bit.
Yeah.
But first, let's talk about the different strategies
Okay.
that investors use to try and reach those goals.
Okay.
especially when they're looking for those fast returns.
Wait, there are different strategies?
Yes.
I thought it was just buy low, sell high.
It's definitely more complicated than that.
Okay.
There are a bunch of approaches,
Okay.
each with their own levels of risk and potential reward.
Okay. You've got me hooked.
Yeah.
Let's get into those strategies.
All right, sounds good. So yeah, let's talk about those different strategies for getting those quick wins.
Okay, break it down for me.
All right, so let's start with growth investing.
Okay.
That's one that I think really gets new investors excited.
Yeah, for sure.
It's about finding those companies that are about to take off, like the ones that pioneered e-commerce,
Right.
or like the trailblazers in electric vehicles.
Yeah.
We've all seen how those early investors made a ton of money, but how do you actually spot those companies?
Yeah, that's the question, right?
It's all about looking past the hype
Yeah.
and really understanding the company.
Okay.
Like you're a detective
Okay.
piecing together clues.
Okay.
You're digging into their financials, checking out their market share, seeing who their competition is, and then figuring out if they're going to grow over the long term.
Okay.
Are they like shaking up their industry?
Right.
Or are they creating a whole new market?
Okay.
Those are the companies that are probably going to grow fast.
So it's about finding the game changers.
Exactly.
The companies that are like rewriting the rules.
Yeah.
But come on.
Yeah.
Not everyone has time to like
Right.
deep dive into all that
That
stuff.
does take some time, yeah.
Are there any strategies that are a bit easier,
Definitely.
for us regular people?
Oh, yeah, for sure.
What about active trading?
Active trading is a good one.
Okay.
So instead of holding on to investments for a long time,
Yeah.
you're trading frequently, taking advantage of those small changes in the market.
Short-term changes.
Yeah, exactly. Like, think of it as navigating a river.
Okay.
You got to be quick and responsive
Yeah.
to stay on course.
Okay.
You
Yeah, I get it.
got to read the current.
Okay, that sounds pretty intense.
It can be, yeah.
It's like you're a day trader, like always looking at charts and graphs.
Right.
What about if I want to take a more relaxed approach?
Oh, there's definitely a strategy for that, too.
Okay, good.
There's sector rotation.
Sector rotation.
So picture the economy as a constantly changing thing.
Okay.
Different sectors are always becoming more or less important based on all sorts of stuff.
Yeah, like what kind of stuff?
Economic cycles, consumer trends, new technology.
Okay.
Sector rotation is all about
Okay.
seeing those changes coming and moving your investments
Yeah.
to take advantage of the new opportunities.
So it's like you're riding the waves of the economic cycle. But how do you predict those changes?
Well, we don't have a crystal ball or anything,
Okay, good, because I was going to ask for one.
but we do have data. We have trends, and we have experts who analyze all this stuff.
Yeah.
Seasoned investors, they pay attention to economic indicators,
Okay.
government policies,
Yeah.
how consumers are behaving,
Uh-huh.
and new technology.
Okay.
They're trying to figure out
Yeah.
which sectors are about to take off.
And then they shift their money around.
Exactly.
Okay, that makes sense.
Yeah.
But all that stuff
Yeah.
about market analysis and economic indicators,
Right.
it's a bit overwhelming.
It can be. Yeah.
Are there any investment options that are a little bit more
Oh, yeah. Definitely.
straightforward
For sure.
and maybe a little bit more exciting?
Well, if you're looking for big returns, you could try leveraged ETFs.
Leveraged ETFs. Okay.
Yeah. So those are exchange-traded funds
Okay.
that use leverage.
Which is like borrowing money, right?
Yeah, exactly. They use borrowed money
Okay.
to potentially amplify your returns from a particular index.
So it's like
Yeah.
adding a turbocharger to your investments.
That's a good way to put it, yeah.
So instead of just riding the market,
Mm-hmm.
I could boost my potential gains.
Exactly.
Okay, that sounds good.
It does sound good, but
But I'm guessing there's a downside.
yeah, there is a downside.
Okay, what is it?
So leverage works both ways.
Meaning?
It can increase your gains,
Yeah.
but it can also increase your losses.
Okay.
So if the market goes down,
Yeah.
you could lose a lot more money.
So it's
So
like
it's high risk, high reward.
high risk, high reward.
Okay.
Not for the faint of heart.
Definitely not for me.
Yeah.
What about those stories of people getting rich from IPOs?
Yeah. IPOs.
Initial public offerings.
Exactly.
Is that a good strategy
It can be, yeah.
for someone just starting out?
It can be exciting
Yeah.
to get in on the ground floor
Yeah.
of a new company.
Like the next big thing. Exactly. Like before they become...
Like the next Amazon.
Yeah, exactly.
But how do you know which ones will be successful?
It takes a lot of research and analysis and honestly a bit of intuition too.
Intuition. Okay.
Yeah, you're not just evaluating the product.
What else are you looking at?
You're also looking at the management team.
Okay.
their competition, and if they have the potential to really disrupt their industry.
Disrupt or create a whole new industry.
Exactly.
Okay, so it's like venture capital, but on a smaller scale.
Yeah, that's a good way to put it.
You're betting on the companies that you think will be huge.
Yeah.
But all this stuff
about
picking companies and timing the market seems so complicated.
It can be.
Is there a simpler way to approach investing?
Well, there's no magic formula or anything, but one of the most important things is diversification.
Diversification, okay.
Don't put all your eggs in one basket.
I've heard that one before.
You got to spread your investments around different asset classes, different sectors, different parts of the world.
So it's like building a strong foundation for a house.
That's a good way to think about it.
Making sure it can handle anything.
Exactly.
Okay, but how do you actually diversify?
Good question.
Yeah.
So think of your portfolio.
Okay.
Like a balanced meal.
A balanced meal. Okay.
You need different nutrients to stay healthy.
Yeah.
And your investments should be the same way.
Okay, so what are the essential investment nutrients?
Well, you got stocks.
Okay, that's...
Those are usually the growth engine of your portfolio.
Okay.
They represent ownership in a company.
Got it.
Then there's bonds.
Bonds, okay.
Those are usually seen as more conservative.
Yeah.
They're basically loans you make to a government or a company.
Okay.
And then there's real estate.
Okay, real estate.
Which gives you tangible assets.
Tangible meaning like I can touch it.
Exactly.
Okay.
And you can also get rental income.
So stocks for growth, bonds for stability.
Yeah.
And real estate for something I can actually touch.
Exactly.
That's a good starting point.
Yeah.
But how do I decide how much to put into each one?
So that's where your risk tolerance comes in.
Okay. Risk tolerance.
And also your investment goals.
Okay. Risk tolerance sounds important.
It is.
But how do I figure out what mine is?
So it's not really about a test or anything.
Okay.
It's more about understanding yourself.
Right.
Ask yourself, how comfortable are you with the idea that your investments might go up and down? How much are you willing to potentially lose in order to get those big gains?
Okay.
Your answers will help you figure out how to divide up your money.
So it's about knowing how I'll feel
Yeah.
when the market goes up and down.
Exactly.
You mentioned investment goals, too. How do those fit in?
So your goals are like the roadmap for your investments.
Oh, hey.
Are you saving for retirement, maybe a down payment on a house, or your kids' education? Each goal has a different time frame, and it needs a different level of risk and potential return.
So like a long-term goal.
Yeah.
Like retirement.
Exactly.
I might be able to take more risks.
Right.
But for a short-term goal, like a down payment on a house, I might need to play it safer.
Exactly. That makes sense.
So when you match your strategy to your goals and your risk tolerance, you're setting yourself up for success.
Got it.
And you're probably going to stress less along the way.
That's good.
But diversification isn't something you do just once.
Okay. So it's not just about spreading my investments around.
Right. It's not a set it and forget it kind of thing.
Okay. There's more to it.
Yeah. Because even with a diversified portfolio, the market can change things.
How so?
So your initial asset allocation can drift.
Okay.
That's where rebalancing comes in.
Rebalancing. Okay, what's that?
Think of it like rearranging the furniture in your house.
Okay, I like that. So rebalancing is about periodically adjusting your portfolio to get back to your original asset allocation.
Okay, give me an example.
Say you start with a 60-40 split.
60-40 between
stocks and bonds.
Okay.
Then after a year, the stock market goes up a lot.
Yeah.
And now it's 70-30.
Okay.
Rebalancing means selling some stocks and buying more bonds.
To get back to 60-40.
Exactly.
Okay, so it's about maintaining that balance, making sure no one asset class takes over.
Yeah.
But what about when the market takes a sudden dip? How do I protect myself from that?
So that's where risk management tools come in.
Okay.
One of the best tools you have is a stop-loss order.
Stop-loss order.
Okay.
You know what that is?
No, explain it to me.
It's like an emergency brake for your investments.
Okay. I like that. So how does it work?
So it's an instruction you give your broker to automatically sell a stock if it drops below a certain price.
So it's like setting a limit? Exactly. It's a safety net.
If the stock goes below this price, I'm out.
Yeah, exactly.
But how do you know where to set that limit?
It depends how much risk you're comfortable with and your overall strategy. Some investors set it a certain percentage below the purchase price. Others use technical indicators or support levels from charts.
Okay, so it's a way to protect myself from big losses.
Exactly.
To keep those little dips from turning into something huge.
Right.
Okay, that makes me feel better.
Yeah.
But what about when the whole market is going crazy?
Yeah.
Are there any investments that are like safe havens?
Yeah, exactly. Safe haven assets.
Safe havens, okay.
Those are investments that tend to hold their value
Okay.
or even go up in value when the rest of the market is crashing.
Safe havens. I like the sound of that.
Yeah, so give you an example.
Yeah. What are some of those?
Well, there's gold.
Gold, okay.
People have always seen gold as a store of value, especially when times are tough.
Mm-hmm.
Then there are government bonds, especially from countries with good credit ratings.
Okay.
Those are considered safe because they have pretty low risk.
Right.
And the returns are usually pretty stable.
So gold, because it's always been valuable.
Yeah.
And government bonds, because they're stable.
Exactly.
But are safe havens only useful?
That's a good question.
When the market is crashing?
So they definitely do well during those times.
Yeah.
But they can also be a good part of your portfolio.
Okay.
Even when things are calm.
Okay, so risk management is not just about reacting.
Right.
It's about planning ahead.
Exactly. You're building a portfolio that can handle anything.
Okay, I get it.
Yeah.
But with all these strategies and tools,
it's kind of a lot.
It's still a bit overwhelming.
Right.
Where do I even start?
Okay, that's a great question.
Yeah.
And it's one we're going to dive into right after this quick break.
Oh, come on. You're going to leave me hanging.
Yeah, we'll be right back with some practical tips.
Okay, I can't wait.
To help you get started.
All right, let's take a break. All right, so before the break, we were talking about risk management.
Yeah.
And how to get started as a new investor.
Mm-hmm.
You promised some practical tips.
I did.
Let's hear them. Where do I begin?
So a good place to start is figuring out where you stand financially right now.
Okay.
You know, like laying the foundation before you start building.
So it's like taking inventory.
Yeah, exactly.
Before I go grocery shopping.
Yeah.
I got to see what I already have.
Right. You got to know what's in your pantry
Exactly.
before you buy more stuff.
Okay, so once I have a good understanding of my finances,
then you can start setting those SMART goals.
Oh, yeah. Those SMART goals.
Specific.
Measurable.
Uh-huh.
Achievable.
Okay.
Relevant.
Got it.
And time-bound.
Okay, SMART goals. I can do that.
Yeah.
But I got to be honest, I'm still a little scared of investing.
I get it.
Do I need to, like, hire a financial advisor? Not necessarily.
Okay.
It depends on how comfortable you feel and how complicated your goals are.
Okay.
There are a lot of resources out there now.
Really?
For people who want to manage their own investments.
So, like, what kind of resources?
There are online platforms with educational materials and tools to help you research and track your investments.
Okay.
There are even robo-advisors.
Robo-advisors, what are those?
They use algorithms.
Algorithms, okay.
To automate your investment decisions.
Oh, wow.
Based on your risk tolerance and goals.
So I can try it out without having to hire a whole team of experts.
Exactly.
Okay, that's a relief. But let's go back to that first question.
Okay.
The whole reason we're having this conversation, is it really possible to go from 0 to 6 figures in a year?
So it's important to be realistic.
Okay.
It's possible.
Yeah.
But it's not likely for most people.
Okay.
It usually means taking on a lot of risk.
Right.
Making really good decisions. And honestly, having a lot of luck.
Okay, so not impossible.
Right.
But I shouldn't expect it to happen.
Yeah, it's better to focus on building a solid plan.
Okay, a long-term plan.
Exactly.
Yeah.
You know, slow and steady wins the race.
Okay, slow and steady.
Set realistic goals. Make smart choices.
Yeah.
Manage your risk. And let compounding do its thing over time.
So I'm shifting my mindset.
Good.
From getting rich quick to getting rich smart.
I like that.
But I'm curious if you could invest in anything right now.
Oh, that's a good question.
With all your knowledge and experience, where would you put your money?
You know, I'm really interested in sustainable investing.
Sustainable investing, okay.
Yeah, companies focused on renewable energy, green technology, things like that.
Okay.
Making a positive impact.
So it's not just about the money.
It's not just about the money.
It's also about, like, my values.
Exactly. Aligning your investments with what you believe in.
I like that.
More and more investors want to do that.
Yeah, make the world a better place.
Yeah, exactly. It's not just about profits anymore.
Wow, we covered a lot of ground today.
We did?
We talked about the dream of getting rich quick. We busted some myths.
Yeah.
And we gave some advice on how to build wealth.
Hopefully some helpful advice.
Any final words of wisdom?
I would just say, remember, investing is a journey.
A journey. Yeah.
It's not a destination.
Yeah.
Be curious, keep learning. The more you know, the better you'll be at it.
And the more confident.
Exactly. And most importantly, have fun.
Have fun. I can do that.
Yeah.
Well, that's it for today's deep dive, everyone.
Thanks for listening.
We hope you learned something.
Yeah. And hopefully
And you're feeling inspired.
you feel a little more in control.
Yeah. Empowered to take charge of your financial future.
Exactly.
Remember, the first step is the hardest.
It is.
What are you waiting for?
Get out there and start investing.
And if you want to learn more, check out our website or social media.
We've got more resources and stories.
Exactly. Until next time, keep learning.
Keep growing.
And keep diving deep.